Good day from Wall Street. This is Nick Casella, Senior Mining and Metals Analyst here at the Wall Street Ledger. I'm pleased to have on the line from Canuc Resources, Chris Berlet. He's the President, CEO, and Director. Company trades on the venture ticker CDA, as well over-the-counter bulletin board ticker CNUCF. Chris, thank you for joining us here at the Wall Street Ledger.
Thank you, Nicholas.
For our listeners who want to know more about the current projects in operation, why don't you fill them in on the San Javier Silver Project?
San Javier Silver Gold Project. Sure. The little town of San Javier, it's about an hour and a half west or east of Hermosillo in Sonora State, Mexico. Great state for mining, lots of mining projects. Silver, gold, some of the great market successes and great companies and great mines in Sonora State. In the foothills of the Sierra Madres, San Javier, the town itself, has been there since 1705. I think there's a little plaque on it, and they've been mining artisanal mining of silver and gold, and also anthracite. There's coal in there in a rock group called the Barranca, which is a sedimentary rock package. So there's been a long history of artisanal mining, anyways, in the town of San Javier. It's a great jurisdiction and a great little highly prospective for something quite large in the silver and gold space. So that's where we're doing our exploration.
So why silver? Why go into silver, and why that metal?
Silver is the most conductive metal, most electrically conductive and thermally conductive, actually. So on a scale of 0 to 100, copper would be 96 and silver is 100. So it's a little bit more conductive even than copper. So it has many commercial applications. Also, it has a couple characteristics, economic characteristics, which are low price elasticity of supply and low price elasticity of demand. And what that means is that if prices double or triple, you're not going to get a big increase in supply. So it has low price elasticity of supply, meaning, like I said, is that if the prices go up, you can't ramp up production meaningfully, and you can't have there won't be a significant increase in supply. And low price elasticity of demand means similarly that if prices double or triple, or there's a big impact on price, demand isn't curtailed meaningfully. So in the latter case, the price elasticity of demand, it has low price elasticity of demand because it's a small cost component of its principal commercial uses, such as photovoltaic and solar panels, photovoltaic cells. So might be 5 to 8% of total cost. So that if prices double or triple, you only have a 10% impact on the price of a solar panel. So that results in low price elasticity of demand. So it has those characteristics, meaning that silver price can double or triple or change meaningfully. And the supply demand characteristics of the market means the market will continue to balance. And so it can stay there for quite a prolonged period of time. There's some structural deficit arguments about silver that I don't need to get into, but research will tell you that most of silver is a byproduct of other metals. So primary silver mines are a rarity, and certainly less than half of silver production is as a result of primary silver mines.
Tell us a little about the 2020 year review, and then the outlook for 2021 going forward.
Okay, so 2020, we basically, we've been in this area since 2009. We've been accumulating claims along a very high to grade trend. Lots of mining, artisanal mining, over more than 3 kilometers. In 2019, we bought a claim from a coal operator, large claim up at the end, and it had never been reviewed geologically. We started work on it in July 2020. And in August, we found a very large geological structure, a breccia there, that was 800 meters long and 100 meters wide and carrying silver. The whole thing carried silver. And then in the middle of it, there were veins of magnetite that were bonanza grades of silver. So this was a large structure in relative terms. And another thing happened. We found a report that had been written in 2006 by the head of the Colorado School of Mines. And that report predicted that there would be the core of an IOCG discovered in this area, a very, very large, valuable deposit type. And it said that the discovery would happen with the detection of magnetite, because magnetite magnetite is somewhat of a rarity, but associated with the core system for this deposit type, IOCG, iron oxide copper gold. So we found this this silver with magnetite and swarms of magnetite, very, very high concentrations of magnetite. So it was consistent with this report, this projection, this prediction that had been made by Dr. Murray Hitzman, who was the head of Colorado School of Mines. So those two things happened at the same time. And since then, we've done a lot of work on sampling, and there's very, very high grades of silver in the magnetite. And then we did a magnetic survey, and we found some very large magnetic anomalies, which are now going to drill starting Monday. So we're talking about, when I speak about large, I mean 1,000 meters long and 600 meters wide, and 3 of them. So it's not a vein structure; it's like a plug. And if it carries high to bonanza grades of silver, these magnetic anomalies, as the magnetite that comes to surface does, and we've assayed it and reported it multiple times, that would be a very significant change. And the deposit type that we're considering here is called IOCG, and they're in the multi-billion-dollar metal inventory.
So let's switch gears a bit here and talk about this current board and management team at the company.
Principally geologists. I'm a mining engineer with some finance experience, but you know, we have several geologists who are all investors for the most part, and shareholders. And what attracted them for the most part to the company was a grade. You know, average head grade in a silver mine is 160 grams. This stuff's 400 plus with gold in it, 2 grams gold. But as I said, it's not the veins that we're seeking to kind of prove up here. In the near term, we're talking about the potential core of an IOCG deposit, which is a very significant, would be a very significant find if we're able to drill into.
What really sets the company apart from the other venture mining stocks?
A lot of silver projects are veins. You know, a lot of primary silver projects are veins. And there are veins on this property, very high silver grade veins. And there are in Sonora some of the best projects for silver and silver vein systems. There's no question about that. So the mantle in Sonora has plenty of silver in it, and there's gold associated with these silver systems in Sonora, and they've become very good and very valuable mines, very valuable, you know, very great performance for the stocks, for the companies that have these type of discoveries. But that's not what this is. Your question is, how does this different? And this is different because it's an IOCG. You know, if our anomaly is 1,000 meters long but 600 meters wide, it's not a vein. A vein might be 3-5 meters wide. So IOCG deposits, they come from deeper down. They come from the mantle, hence the association with iron. And when they're large, high grade concentrations, they're very, very valuable discoveries, and I mean, world class. The nature of IOCGs, Olympic Dam, Ernest Henry, Candelaria. There's several. You know, it's a deposit type classification that began in the 1990s. So if this proves out, and we're drilling, you know, like I said, Monday into these Monday drilling starts into these magnetic anomalies, and it's an IOCG core, it would be a very significant discovery. It would be different than a vein system that might be 2 to 3 to 5 meters wide, or even stacked veins. The structures here look like they're 600 meters wide, and that would be consistent with IOCG type geology, more like a plug. I compare several sheets of paper, might be a high grade vein compared to a watermelon. You know, and that's really what we're looking at. So the economics of extraction and the value proposition is obviously very different when you can mine, extract, and you've got, you know, something that has a larger tonnage of high grade material, and so that's the prospect. That's how it's distinguished from other deposits, other vein type deposits in this area.
Where do you see the company positioned in about a 2 to 3 year period?
Everything's going to change in the next 3 months, 3 to 5 months. You know, if we successfully drill into an IOCG in the next 3 months, there'll be a very meaningful change in value. then the value proposition continues as you drill out the into resource, reserve, measured, indicated, inferred, proven, and probable resource and reserve categories, respectively. So that process will carry on. Usually there's a pretty strong dynamic when you first get evidence of a new discovery. That's really what we're looking at in the next 3 months. Then there'll be a strong price reaction, I expect, if we're successful. And then we will be able to drill towards resource and reserve category. Ultimately, mining of this stuff, it's in a great area for mining. There's three-phase power, there's paved roads, there's water, there's infrastructure advantages. Paved roads all the way to within about 2 kilometers of this area. So three-phase power right to the town of San Javier. So you have everything required to build a significant mine. And that process will start to those attributes will start to matter meaningfully as the value proposition comes in. So as it's drilled into resource categories, metallurgy will be undertaken, but it's not envisaged. So it's not really, like I said, the next 3 to 6 months we could have a major discovery. That's really what our game's about here, what the story's about, what our company is about today. After a good period of time working on it and having a lot of information to support our thesis that we could have. We have 3 targets, 3 big, anomalous targets here. And so we'll continue to go in 3 years. If we haven't been possibly acquired, we'll continue to go all the way towards development. But probably the most dynamic period for the company will be in the next 3 to 6 months if we're able to prove this thesis that these are in fact IOCG type deposits.
So then, in conclusion, then why should investors consider Canuc Resources as a good long-term investment opportunity?
Well, silver has silver and the prospect for a major discovery. We're not talking about benchmarking returns against kind of standard index performance. We're talking about a story that's taken 10 years to come together with acquisition of multiple claims and some strategic assets, some information, and a geological thesis that these IOCG these anomalies that we have could be IOCG deposits. So I would really, to be honest, say speculative, because we're not talking about a 50% return. We're talking about a major change in valuation. Our company value today is about 24 million Canadian dollar market cap. We're after a metal inventory, if we're successful, and it's an IOCG in the multi-billions of US dollar. I mean, the comparables, real bona fide IOCG discoveries are in the small ones are $20 billion of metal value. Bigger ones are 50 plus. So something from a 20 million market cap, you might go to 5 to 10% of metal value. It's still at multiples of what we're trading at today, significant multiples. And we're trying to prove that this is what these anomalies are. Drilling is the only way to do that. We're doing it now, starting on Monday, and we'll have results in the next 3 to 6 months. So if it's speculative, the outcome could be fantastic, and it's really only a specific portion of a portfolio that you might consider for that type of investment. But that's what we're talking about. If we're successful at finding silver, there's many reasons why silver, as the most conductive metal, electrically and thermally, and with many applications in a greening economy. That will have robust demand characteristics over the next decade, and probably price characteristics with it. So there'll be lots of opportunity in the silver space. What we're specifically talking about is having a significant silver discovery in the context of that market.
So we'll keep an eye out for the company and its progress ahead. Chris Berlet, thank you for joining us here at the Wall Street Ledger.
Thank you, Nicholas. That's great. Appreciate the opportunity to present.
Our featured guest has been Mr. Chris Berlet, President and CEO and Director at Canuc Resources. Canuc Resources currently traded shares on Toronto Venture Exchange and ticker CDA, as well over-the-counter bulletin board ticker CNUCF. Thank you for joining us.